$36 trillion. That's the United States national debt. $36 trillion. If you stacked that in $100 bills, the pile would reach past the moon. If you tried to count it out loud, one number per second, it would take you over 1,000,000 years. But here's the part they never explain. Who actually owes that money? Because it wasn't you who borrowed it. You didn't sign anything. You didn't agree to any terms. You didn't get a phone call asking if it was okay to put another trillion on the tab. And yet, you are the one who's going to pay it back. Welcome to Exit Velocity. Last episode, we talked about how inflation steals your time, how the hours you work by less every year, not because you got worse at your job, but because the money you're paid in keeps losing value. Today, we're going to trace that problem to its source, because inflation isn't some mysterious economic weather pattern. It has a cause, and that cause is the debt you're standing under right now. Let's start at the beginning. The U.S. national debt is money the federal government has borrowed, mostly by selling treasury bonds. When the government spends more than it collects in taxes, which it does every single year, it covers the difference by issuing debt. Think of it like a national credit card, except there's no credit limit and nobody ever plans to pay it off. In 1980, the national debt was about $900 billion. Sounds like a lot, but it was roughly 32% of GDP, meaning the country owed about a third of what it produced in a year. Manageable. By 2000, it had grown to $5.6 trillion. After 9/11, the wars in Iraq and Afghanistan, and the 2008 financial crisis, it hit $13 trillion by 2010. Then COVID happened. In just 2 years, the government added over $8 trillion, and today it sits at $36 trillion, roughly 124% of GDP. The country now owes more than it produces in an entire year. Let that sink in. The United States of America owes more money than the entire American economy generates annually. So who lent us all this money? Some of it comes from foreign governments. Japan and China are the two biggest holders. Some comes from pension funds, mutual funds, and insurance companies. And a lot of it, this is the important part, comes from the Federal Reserve itself. When the Federal Reserve buys treasury bonds, it doesn't use money it had sitting around. It creates new dollars out of nothing. It adds them to a digital ledger, uses those invented dollars to buy government debt, and suddenly the government has fresh cash to spend. This is what people mean when they say money printer goes brrr. It's not a joke, it's the actual mechanism. Between 2020 and 2022, the Federal Reserve created roughly $5 trillion this way. $5 trillion conjured into existence. And every one of those dollars diluted the value of every dollar you already had. Here's what most people miss about the national debt. It isn't something far away that only matters to economists and politicians. The debt is a claim on your future labor. When the government borrows money, it's making a promise. We will pay this back with future tax revenue. And where does tax revenue come from? Your paycheck, your income tax, your sales tax. Every dollar the government borrows is a dollar it expects to extract from you, or your children, or your grandchildren. Right now, the federal government spends over $1 trillion a year just on interest payments. Not paying the debt down, just servicing the interest, that's more than the entire defense budget, more than Medicare. It's the single largest line item in the federal budget, and it's growing. Think about what that means for you. A significant chunk of every tax dollar you pay doesn't go to roads or schools or national parks. It goes to bondholders, institutional investors, foreign governments. You're working to pay interest on a loan you never took out, to benefit people you'll never meet, for spending decisions you had no say in. This is why I say you are the collateral. When a bank gives someone a mortgage, the house is the collateral. If they don't pay, the bank takes the house. When the government takes on $36 trillion in debt, you are the collateral. Your future productivity, your future earnings, your future labor. The government is betting, correctly so far, that it can always extract enough money from working people to at least cover the interest. And when the interest payments get too high, when they can't raise taxes enough to cover the gap, they don't default, they print. The Federal Reserve creates more money, buys more bonds, and the cycle continues. Each round of printing dilutes the dollars in your bank account. Each round of debt adds to the burden your children will inherit. This is the debt spiral. Borrow money. Print money to cover the interest. Inflation eats the purchasing power of the money you earned honestly. So you work more hours, earn more nominal dollars, and feel like you're running on a treadmill that keeps speeding up. It's not a conspiracy. It's not even hidden. It's the explicit, documented, openly discussed design of the modern monetary system. The people who run it will tell you exactly how it works. They just use language designed to make your eyes glaze over. Quantitative easing, open market operations, yield curve management. Those are all euphemisms for one thing: creating money that didn't exist before and using it to buy debt that can never be repaid. So what happens when a country owes 124% of its GDP and the debt is growing faster than the economy? History gives us the answer. Every empire that debased its currency followed the same path. Rome clipped coins. Weimar Germany printed marks. Zimbabwe, Venezuela, Argentina. The pattern is always the same. The currency loses credibility. Slowly at first, then all at once. The United States has one massive advantage those countries didn't. The dollar is the world's reserve currency. Every country needs dollars to trade oil, settle international debt, and hold in reserve. This creates artificial demand for the dollar that props up its value even as trillions of new ones are created. But that status isn't guaranteed. It's earned. And it's being eroded every time the government signals that it will always choose printing over fiscal discipline. So what do you do when you realize you're the collateral? You exit the system, not violently, not dramatically, quietly, deliberately. You convert the fruits of your labor into something that can't be debased, diluted, or confiscated through monetary expansion. Bitcoin supply is fixed at 21 million. No government can print more of it. No central bank can quantitatively ease it into oblivion. No politician can borrow against it and leave the bill for your grandchildren. When you hold Bitcoin, you hold an asset with no counterparty risk. Nobody owes you anything. Nobody can default. Nobody can dilute your share by creating more. The national debt is $36 trillion. The interest payments alone exceed $1 trillion a year. And the only tool they have to manage it is the same tool that's destroying your purchasing power. This isn't going to fix itself. The math doesn't work. The debt will keep growing, the printing will continue, and the value of every dollar in your pocket will keep fading. The question isn't whether you can afford to buy Bitcoin. The question is whether you can afford to keep storing the value of your life in a currency that's being used as collateral for debts you never agreed to. You're not the citizen in this equation. You're the collateral. And the only way out is to stop being denominated in their system. Next episode, we're looking at the endgame. What happens when the money printer can't stop? When the debt is too big to service and too big to pay off? History has answered this question before, and it's never pretty. That's episode 9, The Money Printer's Endgame. Until then, think in Bitcoin.